for all of the Asian markets, we are definitely seeing that positive handover from Wall Street rub off and reflect in what's going on with the early rates.
The euro area banking sector is resilient with strong capital and liquidity positions.
Mr. K. Krithivasan has been appointed as the Chief Executive Officer designate with effect from 16th of March 2023.
I'm hoping to lead this company and double down on our core pillars of customer centricity.
17,122 is where we are at on the Nifty. The sensex is starting in a pretty solid way as well.
We are a truly vertically integrated biosimilars company, which really makes us very competitive.
We've actually, since COVID, we've seen an explosion.
It's turning out to be a session where we are just about holding at around 17,000 for the Nifty and the Bank Nifty, which is down around 30 odd points.
Well, starting to report on the last hour of trading this week. You're with us here on a fresh new edition of Closing Bell, and we're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi.
Hi, what a week,
Good afternoon,
right?
guys. Finally, this week is coming to an end.
Finally. One more hour.
Yeah, one more hour, and then we have something more. Well, you want to catch Editors Roundtable. We'll recap all that has basically happened all this week. But actually starting from the middle of last week when this entire episode started, and just completely, and I don't use it lightly, historic kind of markets we've reported on. Anyway, we've got the market now up a little bit. What, 45, 50 points or so is what we have. Actually, today's session, you can cleanly divide into 2 or 3 phases. We got a strong start. Then the market kind of sold off till about 12 noon. From 12 noon to 2 p.m., the market was dead, nothing at all. And about 2 p.m. onwards, it started a bit of a uptick once again. Maybe we're already in the sort of 5th or 6th phase, whatever. But the point is, mid-session, nothing happened. A little bit of action picking up, which has been sold into about 60 points there. You know, the ease with which the index is moving 20, 30, 35 points is quite something. IT and metals are doing well. So those are the 2 sectors in focus. And TCS, we'll talk more about that. And we were talking about why, there was no need for any large cuts or anything on the back of the CEO change or the announcement from yesterday. The stock is actually higher. FMCG and autos are under pressure. Some stability coming back to global funding markets as well. If you look at yields, if you look at the dollar, some signs of stability, both out of the US futures and, of course, out of Europe as well. The markets will continue to watch headlines, and I think they'll continue to do that over the weekend as well. Last weekend was extremely busy. Let's just hope this one is calmer. And I just noticed, this entire thing started from last Wednesday when Silvergate, the bank, basically said that they are shutting down. From the 8th, that is last Wednesday's close, till now, India actually is the worst performing Asian emerging market. There is nothing which is done worse off. And the change is not large. It's about 4.5% on the Nifty and the Sensex. But other markets have done, some have done much better as compared to the Nifty. 17,057, 17,060 is where we're at. Reema, hi.
Hi, a bit disappointing, right? We had that gap up opening. The Nifty went to levels of 17,150. Global markets were upbeat. Even right now, European markets are currently up close to about 0.7, 0.8%. But the Indian markets couldn't quite hold up that momentum on the way up. And we started sliding through the course of the day. Let's see whether we can manage a bit of a pullback, get back to those levels above 17,100. But from the day's high, the Nifty is still off close to about 90 to 100 odd points. You said next week, hopefully, it's a bit lighter. Remember, we've got the FOMC decision, right?
I don't know, I was just hoping the weekend is light.
At least we can do with the no bank failure, bank run news, at least over the weekend, right? I think traders and commentators like us perhaps deserve that.
Or management changes, right?
Or management changes, you said it.
Yeah.
So I think for what it's worth, we've got a green screen and there's a fair amount of buying. By the way, Reliance Infra is on a stock that we usually talk about. There's a lot of buying on that because of that award that's come in. That was a Delhi High Court order. I think they're getting over 4,000 crores or so. And that's a stock that's moving higher on volumes now. But aside of that, there has been stock picking in the broader market as well. KPIT Tech, Electra Green Tech, these are names that have found buyers as the market overall settled. People went back to stock selection and stock picking. DLF, for instance, has had a very good day today, 4.5% up. So we will cover a lot of these individual stories as we go along. But the headline remains that the market has managed to see some buying from lower levels, which is something that we had almost forgotten. And even banks are holding up pretty well for what it's worth. 17,000, I think 140 thereabouts, 145 was the day's high. We still have an hour to go. So let's see if the bulls can manage to put on a show as we get into the weekend. With that, Rima, let's go through the lineup for the day.
Okay, it's Friday, 2:30 p.m. and this is what's lined up in the next 1 hour. IT stocks like LTIMindtree signed a surging in trade on the back of fresh upgrades coming in from Morgan Stanley. Complete details from the report on the show.
KPIT surging in trade on news of a tie-up with Honda to power their software-defined mobility roadmap till the year 2030. Key excerpts from our conversation with the management coming up.
Jubilant Pharmova is in focus after the stock surges after the Government of Canada approves a loan for its arm.
And as always, we'll also talk portfolio bets with our alpha manager of the day, Trideep Bhattacharya of Edelweiss AMC. All this and more over the next 60 minutes.
Okay, some news coming in the bottom of the screen. China to cut reserve requirement ratio by 25 basis points. So more easing from China coming through. Data has been strong, commentary has been strong, and this is the latest coming through from China. Markets, of course, Asian markets are shut, and the one thing which kind of people instinctively look to when China does something is, of course, what happens to metals here. So we'll see. But this is coming in right now. Now, what to do in the last hour of trade, in the last hour of the week as well. Mitesh is with us. Mitesh, 75, 80 points higher. So it's it'll take some time, right? Base building, I think, is what you said in the morning. But is this kind of going towards, contributing towards that base building to today's action and in a constructive way, you think?
Very much, Prashant. In fact, today we did open higher, failed to get past the upper end at 17,150, declined to 16,950 or just about 16,960, and then have again started moving up. So this is basically contracting, which is not a very bad sign. This still becomes more of a sideways activity between 16,800, 850 on the downside to about 17,150 on the upside. And maybe a day or two more, but I think then there's a good chance that we'll attempt to get past 17,150, have at least a trading or a stronger pullback rally. Possibly to 17,250, 300 zones to begin with. And if we start getting past those pivots, then I think we'll look at higher levels. So for the timing, the idea is that don't be bearish. I think short trade has played out. At least one leg of short trade has played out. Wait for some kind of a stronger pullback before you go short again on the index. Coming to stock side, Maruti is a sell. That's a stock which is broken down. So keep a stop above 8,400. Sorry. Look for targets of around 8,200 on the downside over here. While Naveen 14 is something which I would recommend as a buy call with the stop just below levels of 41.90 for targets of 43.50.
Okay. Okay, thank you very much for that. Let's talk a bit about mid-cap technology. The IT index is leading from the front. The Nifty IT index is up nearly 1.8%. And in that, it's names like Cyient and LTIMindtree which stands out. So today, Morgan Stanley has written a report on Indian IT where on Cyient, there is a double upgrade. So their earlier rating was underweight. By double upgrading it, they've made it straight away to an overweight. So they've bypassed that stage of an equal weight. It's a double upgrade. And the reasons for that is, one, the revenues of Cyient are linked to the aerospace vertical. The aerospace vertical contributes about 18% to Cyient's revenues, and we know the uptick that we are seeing in the airline volumes, etc. All this bodes well. The company is taking steps to improve their margin. And third, there is value unlocking because one of their products, business DLM, has filed a DRHP for a separate IPO, for an IPO listing. So there is value unlocking. And the fourth reason is valuations are cheaper. Cyient trades at 12.6 times forward multiple, while peers are far more expensive. So that's on Cyient and Morgan Stanley's rationale for the double upgrade. On LTIMindtree, it's a single upgrade. So from equal weight, they've now made it overweight, and their target price stands at 5,600. They're saying the recent correction in LTIMindtree was not on the back of revenue estimates or forecasts getting pared down. It was more on account of personnel-related changes. Remember, post the merger, It was Debashish Chatterjee, the CEO of Mindtree, who became the CEO of the combined entity, while Sanjay Jalona, who was earlier the CEO of LTI, he stepped down. So there was some attrition related to that, and that's one of the reasons why, according to Morgan Stanley, the stock was an underperformer. But going ahead, purely on revenues and margins, Morgan Stanley believes that LTI Mindtree is very well placed. Look at their margin estimates and how they anticipate margins to improve. 16.1% in FY23, likely to expand by 150 basis points in 2 years. And therefore, they believe there is complete merit in LTI Mindtree trading at premium valuations even to large cap peers. So that's about LTI Mindtree. The stock is up 4%. Remember, the street is very divided on LTI Mindtree post the merger. They don't know which way this is going to swing. But another one which catches your attention today is KPIT Technology. The stock has gone ahead and hit a fresh lifetime high, and this year itself, the stock has gained more than 25%. The reason is, earlier this week, the company announced a large software development mobility program with Honda. And this is going to be a long, program till 2030. So the street is very excited about the prospects of this. Earlier today, we had a chat with Kishore Patil, co-founder of MD and CEO of KPIT Tech, on this Honda tie-up for software-defined mobility. Listen into what they had to say.
We have been working with Honda for last 6-7 years. And basically, we have been involved in terms of working on projects and programs in different areas, including autonomous, etc., connected infotainment, etc. So here, when, as we call, all the OEMs are moving towards software-defined vehicles, or as Honda calls it, software-defined mobility, this program was being undertaken by Honda. They thought that they would need a partner, kind of a long-term partner. They need to make software-defined mobility as a success for Honda. There is no numbers attached to the deal. This is a long-term deal, but I may just, I have said that it's basically 2,000 people plus relationship by 2030. This year, we were expecting about 900 plus engagement. This includes some of the current engagements we have.
All right, that's the word from KPIT Tech. Well, let's bring in Prakash Diwan into the conversation. Prakash, welcome to the show. I am sure you're as happy as we are that the week is finally coming down to a close, right?
Oh yeah, it's been quite eventful. More than eventful, should be the week or the last 10 days have actually been absolutely unpredictable. So, I mean, you really didn't know what to expect, and that makes it more difficult to kind of cover things and make sense out of that. Yeah, I agree.
Absolutely.
So thank God it's Friday. Yeah.
Absolutely, couldn't agree more. Okay, so on to these technology companies. Now, I remember our earlier conversation on KPIT Tech. So I still remember that you are a big bull and you're looking to buy that stock at all, significant dips. So let me talk about the other one. This LTI Mindtree upgrade that has come about, I mean, 1,000 rupee upgrade. Your thoughts on this, and whether, this stock would make the cut for you in mid-cap IT?
So, to be honest, I find it too expensive for the kind of expectations that are building up. The merger does bring a lot of synergies. In fact, I was very positive on it pre-merger. But now that, the merger has happened, digested, and then, the results should start flowing out of it. And you've not seen that happen in terms of very major sparks, in terms of, new client wins and all that. And remember, this whole leadership issue that got sorted out with the L&T part of the leadership moving out and the Mindtree leadership coming in is something which was against the grain of the expectation in the company, if you ask me. Whoever I spoke to was absolutely convinced that it would be Mr. Sanjay Jalona would probably lead the combined entity, and which didn't happen. So it takes time to do a reset, and clients can feel that it's a competitive market. We've seen, transition is not so easy. and that makes it difficult to acquire a higher P multiple to the business. So I would wait for things, Surabhi, to be honest. I'm a patient man. As an investor, I would rather miss out on an opportunity to buy something very expensive than to wait for an opportunity to buy value. So yeah, you will get those chances at some point, and you'd have to look for that.
Okay, so you would wait a bit for LTI Mindtree before you make up your mind at what point you want to enter. What about Cyient? Now, Cyient has been an underperformer, but now many brokerages are turning bullish. A couple of months back, Prakash, it was Motilal Oswal who had turned optimistic, and the reasons are all same, right? Their aerospace, their railway business went through a cyclical downturn, and now those same businesses are turning around. They're showing they are in an upswing, and they will start generating that alpha. And plus, there is that value unlocking via the IPO of the design-led manufacturer. Considering in this case valuations are more reasonable, is this a stock that you would consider?
Oh, absolutely, absolutely. In fact, it's been one of our recommended small cap, mid cap picks within the IT space. And this is a company which could do something which will probably be secularly trending for at least the next 3 to 4, 5 years till the aerospace sector kind of vertical keeps on contributing more and more. And remember, this is a time where the kind of inputs that the services that Cyient provides are actually going to be a key differentiator in terms of the way airlines could be profitable or keep their margins, which are anyways always under pressure. And if you had to be profitable, you would have to use every tool in the armory. And this is something which definitely Cyient does provide. And then you have the add-on verticals, which are newly, kind of new discoveries of sorts for them, for their businesses like the railways and also. I think it's a very good setup. The risk reward is very favorable because the stretch on the PE is so limited. I mean, you're not overpaying for it. In fact, it's probably lower than what its long-term averages have been. So yeah, good time to look at Cyient for sure.
Okay, what we'll do, Prakash, is take a quick commercial break here, but then come right back. The market's up, 78, 80 points, 17,064. We'll come back and we'll talk to also have our Alpha Manager of the Day, Trideep Bhattacharya of Edelweiss Asset Management Company on the other side. Stay with us.
Welcome back. The last half an hour belongs to names like Hindalco, 2.5% up on that. UPL, BPCL has been moving well this week. BPCL is up 8.5%. So at a time when the rest of the market is going through, very troubled time, BPCL has only been rising, 8.6% gain this week. And even right now, it's moved to the high point of the day. A couple of private banks like ICICI Bank are moving up. JSW Steel is having a good session. JSW Steel gaining 1 3/4 of a percentage point. Jubilant Pharmova, that's a stock on our radar, 10% higher today. The government of Canada has approved loans for its arm. Ekta's here with the details. Ekta.
Thanks for that. Well, yes, Jubilant Pharmova is buzzing because its arm has received an approval from the Government of Canada, which is going to be providing a partially repayable loan of Canadian dollars of around 23.8 million. This is via their Strategic Innovation Fund program, and this will fund around $108 million in terms of capacity expansion at their Montreal manufacturing facility. The loan is in addition to an earlier announced $25 million loan, which was committed by the province of Quebec for the same expansion project. Now, the expansion project is aimed at upgrading the company's Montreal facility and to increase its fill and finish capacity by over 100%. So this is definitely positive news for Jubilant Pharmova because they would be expanding their capacity, and also this comes at a time where there is a lot of chatter about manufacturing moving away more closer to the developed markets or to the home countries of the US as well as Canada, and hence this would probably put Jubilant Pharmova in a forward position when it comes to having an expanded manufacturing capacity closer to the developed and home markets of Canada as well as US.
It's a massive move on the stock today, 10% and counting. Thanks, Ekta, for all the details over there. Prakash, have you looked at this one, Jubilant Pharmova? It's quite a breathtaking mover today.
Yes, to me, I of course did see the move, but I don't track the company from a fundamental perspective so closely. But echoing what Ekta had to say, I think that's a trend that's probably going to take some much more legs. There are more legs to it than just one-off case here. But that is something which probably is definitely a very major positive for it. But apart from that, I haven't studied the fundamentals of the business to comment on how it makes such a big difference going forward.
All right, Prakash, we'll leave it there. Have a good weekend, restful weekend, and we'll see you back next week. Thanks indeed for joining in.
Thanks, bye.
Thanks very much. All right, now trade adjustments for FTSE and Bharat 22 come into effect today. That is, should actually happen in the last half hour or so. Much of it. Vivek is here with the details of the changes we're likely to see. Vivek, over to you.
Well, good afternoon. It's an important session, and which is why, you're actually seeing quite a bit of volatility in some of the names that we will be discussing. So first, we are looking at the Bharat 22 ETF. These adjustments happened throughout the trading session. And, no constituent changes, only weight adjustment changes. We are highlighting the top names that are impacted by the changes. So first, NTPC and NALCO both expecting to see around $30 to $35 million of inflows in today's trading session. Power Grid, around $18 million of inflows. All of these stocks, especially NALCO, is a buzzer in today's trading session. Now, on the other hand, ITC is seeing a significant outflow of almost $70 to $75 million, and it's a clear underperformer in today's trading session. On the other hand, the FTSE semi-annual index changes that were announced on Feb 17th, today is the adjustment day that the flows will happen in the last half an hour to 1 hour of the trading. And, it's a net inflow event as far as India is concerned. Inflows of close to $380 to $400 million is what, we will be witnessing today. And just highlighting the top names, Kotak Mahindra Bank, inflows of close to $78 to $80 million. Supreme Industry has around $48 million. APL Apollo Tubes, Patanjali Foods, as well as Solar Industries, all of them seeing inflows. Interestingly, Sona BLW, which had a block deal earlier this week on the back of the weightage as far as, the promoter holding is concerned, that too is likely to see inflows of close to $25 million today.
All right. Thanks very much, Vivek. Appreciate you joining in. Good speaking with you. 90 points on the Nifty. So slowly, but it's moving higher. Still away from the day's high, which was, of course, the open. But let's see if we're able to get there. Tridip Bhattacharya is Chief Investment Officer, Equities at Edelweiss Asset Management Company. He's joining in now. Tridip, good to have you with us here. Thank you very much. I was just, before coming in, looking at just valuations 1 year forward. That is FY24. And we're now at about 17.5 times FY24 earnings. The last 10-year average is 17 times, almost exactly 17 times earnings. With this 4.5% correction in the last 5 or 6 days, we are back to the 10-year average. How do you think about valuations now, Tridip? That's the bigger question. Would you kind of look at this where we are now compared to the average? Or is that a moving number based on where you are on earnings? What's your sense?
Good afternoon, and thank you very much for having me on your show. And I would say that the absolute valuations was actually less of an issue all the time. It's probably gotten in our favor over the last week or fortnight of correction that we have seen. Our issue historically over the last 6 months has been the relative valuations relative to the other emerging markets. And that is where we saw a bit of a flow out of India into other emerging markets. But of late, given how the headlines have come out of China reopening, this, that, the other, the headlines have been showing slightly slower growth. So overall, net-net, it's a far more balanced situation. So I would say on net balance, in answer to your question, that while absolute valuations are in line with average, the relative valuations, we are probably still a little bit on the expensive side, but we are gradually getting to a level where all the markets would be seen with regards to the fundamental earnings growth that we will see, and in which case India stands out still quite well.
Tridip, any thoughts on oil marketing companies? With the sharp precipitous decline seen in crude prices this week, Brent is now almost at $75 per barrel. Oil marketing companies like BPCL have re-rated. The marketing margin picture is going to look much better. UBS recently indicated that this quarter in Q4, it could be the best earnings quarter for oil marketing companies in the last many quarters. Is this a tactical play for you?
Sure. I think clearly the factors that you talked about, will play out in the near term and will lead to a bump up in earnings in the OMCs overall. However, one has to balance this near-term positivity with regards to the fact that we are gradually heading towards an election year. And generally, if there is a bit of populism, then some of these gains to be passed on to the end customer could be another issue to contend with. Maybe not immediately, but about 6 months down the line. So I think from a trading standpoint, clearly, near-term bump up in earnings mean better for the share prices. But from an investment standpoint, given that they are still PSUs, and from a PSU basket, the minority shareholders, how they get treated over a period of time needs to be balanced overall. So from a trade perspective, yes. From an investment perspective, we need to evaluate other factors as well.
Pradeep, hi, good afternoon. Surabhi here. Just want to get your house call on IT. There is so much news flow and so much going on. The underperformance, then the headwinds of the recession, and most of these companies undergoing some form of a management change, maybe top level, maybe tier 2. So how are you looking at the sector, and does it make the cut and make it to your portfolios?
It does. And I think on net balance, we went underweight the sector about a year and a half ago, September of year before. And roundabout from September, about a year from then, we have been cutting our underweight position. As we speak, we would be neutral to maybe marginally overweight IT services in our various portfolios that we run. So on net balance, I would say that incrementally through this correction that we have seen, we've actually turned a little more positive than what we have been. But is it an outright overweight call? Not yet. Because I think overall, the calibration of demand with regards to the earnings estimates for FY24, which is a year ahead, is yet to happen. And I think if you give it a month, which is probably April, May, by that point in time, all of this would be realigned. So that will be a lot better time visibility-wise. Prices maybe will probably get a little ahead of time. So you have to balance, how you see the outlook as well as versus how you see the numbers coming out. Now you may have the prices. Later on, you might have better visibility. So I think on net balance, incrementally positive. But we are not yet majorly overweight the sector, but looking for incremental adding to weights.
Okay, so can I then ask you, what is the sector that gets the top billing for you? What would your key overweights be in a market which is dealing with so much of news and noise?
Absolutely. I think it's a great question. I would say that particularly in times like these, one has to sort of start with a medium-term hat and then tweak the portfolio with regards to near-term to kind of, manage the damage, if I may call it that way. And from a medium-term standpoint, what still sticks out quite well for India is the infrastructure, capital goods, and the private sector capex cycle, which will likely to happen over the next 2 to 3 years. It's a multi-year theme, and we continue to remain meaningfully overweight across our portfolios in whatever shape and form that we can get our hands to on various market cap ranges. The second area that we are also quite positive on are very bottom-up India-specific themes like indigenization of defense, beneficiaries of government growth schemes like PLI. On net balance, we think that 2023 would be probably kind of, a time where bottom-up factors will drive a lot of earnings, and we'll have to count on that rather than the macro tailwind. We think that macro could be headwinded, particularly in the first 6 months of the year overall. So those would be a few areas that we would be kind of, overweight in our sector. I think the rebound in financials has by and large kind of, played out to a certain extent. We still continue to like the sector, but less so probably than about 3 to 6 months ago. So those would be the areas that we are kind of, positive on.
All right, Srideep, we'll leave it there. Thank you very much. Good framework, and as always, good getting that perspective for our viewers from you. Thanks indeed. 100 points, so slowly inching higher, 17,100 almost is what we have. I mean, we'll come back and we'll put out the stocks which have also suffered the maximum damage. I was just looking at, this latest leg of fall, which started from last Wednesday, which has been very steep every day, except, of course, these bounces like today, which are the large cap names and which are the mid cap names which have seen a fair bit of fall. So we'll do that. We'll also, of course, get you a check on what's happening in dealing rooms on D Street Chatter. and buy today, sell tomorrow calls with our technical experts as well. Stay with us.
Welcome back. So the bulls are managing to retain some green as we get set to wind down the week. Let's bring in Nimesh and figure out what the chatter has been like today. Nimesh, I'm guessing people are heaving a sigh of relief that at least for today we've not had bad news, bank blow up, some crisis or the other.
Well, should be today's another day of volatile day of trade. But again, if you look at even yesterday's trade, the 16,800 is acting as a very strong support now, and that's a bit of a relief as well. And that's the reason why some bit of action is back even at the HNI desk. I guess the volume today will be on the higher side because of the FTSE rebalancing and the Bharat 22 rebalancing as well. So FTSE itself will lead to an inflow of close to $400 million. So that's why the FI number may look a little large today on the back of that. But even yesterday the feedback was some bit of risk on is back among larger HNIs, and that seems to be there today as well. So I guess 16,800 will act as a very strong near-term support for the Nifty, and maybe you can say a bit of a pullback as well. Remember, the market is net short as well on the larger side, so that may help in terms of a short covering rally. I guess the big trigger to watch will be the next Fed meet, which is on 22nd. So that will be a big trigger to watch out for. I guess the market is also waiting for that trigger to be out of the way, and then maybe we'll see a bit of an up move or a short covering rally as well. That's the overall feedback that I'm picking up. I guess the big sector of the day is clearly technology on the back of short covering, and also there is a bit of buying is back from larger institutions. So that's helping the Nifty. But broadly, it looks like some bit of risk on is back, and I guess the big trigger to watch will be the Fed meet next week.
Nimesh, thank you for that. Last leg of the up move to levels of 17,100 has been led by the banks. So the Nifty Bank is up 500 points. It's over a percentage point gain. And pull up HDFC Bank, HDFC Limited, State Bank of India and Kotak Mahindra Bank. These are amongst the big movers in the last 10 minutes. There you have that intraday chart. After 3 p.m., there is a vertical up move in these stocks. Nimesh, what about the individual stocks that you're looking at today?
Well, before I talk about the individual names, Rima, a couple of reasons why the bank Nifty is in a big up move. One, of course, there is a big FTSE rebalancing in Kotak Mahindra Bank of $70 to $80 million. So that was expected, in the last half an hour, you'll see a bit of an uptick in Kotak Mahindra Bank. So that's helping that move. And of course, there was a news flash as well about HDFC Bank getting the NCLT merger. So NCLT approval for the merger. I guess that's the reason why we're seeing a big up move in the Nifty Bank. Coming to individual names first, now the first stock is ITC. That's part of the Bharat 22 rebalancing, and hence huge volumes on that stock. There is a block as well of 50 lakh shares, and the overall feedback is maybe one of the large FIs sold in today's block deal as well. So the disclosure could be important as far as ITC is concerned outside of the FTSE rebalancing flow. So that's the first one. The second stock is AB Capital. Within the NBFCs, this is one stock which is buzzing in trade today, good volumes as well. And the overall anticipation is maybe you're going to see a corporate development in that company very, very soon. So that's something to track as far as AB Capital is concerned. The third stock is GMR Infra, that is GMR Airports now. There is a board meeting scheduled today for fundraising. It's likely to be an FCCB to a large investor. But apart from fundraising, I believe there's going to be some corporate development as well by virtue of some reverse merger. So that's something to track as far as GMR Infra is concerned. And the last stock is Reddington. Been consolidating in a very narrow range, but now some small buying is back at an leading FID. So some bit of buying traction in Reddington after a very long time. So that's part of my charter list as well.
All right, Nimesh, thank you very much. Appreciate you joining in with those specific names that one needs to watch out for. AB Capital, interesting. GMR Infra, both. I mean, basically, some corporate development expected soon. Well, Mitesh is joining in to tell you what to buy or sell today for a reverse trade when we come back on Monday. Mitesh, over to you.
In fact, have two BTST calls. Ultratech Cement reversed very nicely today. So BTST here with the stop below 72.60 for targets of 73.40 on the upside. And Godrej Consumer, that's a stock which has been making new highs. So that's a BTST as well. Keep a stop at 940, look for a target of 960 for Monday.
Okay, thank you very much for that. Let's talk a bit about HDFC Life. That's in focus today on the back of a Morgan Stanley note. Yash is here with the details. Yash.
Well, the Morgan Stanley note has been released as far as HDFC Life is concerned, but I just want to rewind a little to look at the February numbers. The industry numbers are very weak, but HDFC Life at that time also was an outlier, a strong 38% growth as far as the retail APE premium is concerned. And the industry at this point of time believes that the March numbers could look even better. Morgan Stanley has written a note today on HDFC Life. The rating is overweight. The target price is 715 rupees per share, which is a potential upside of about 55%. In terms of quality, what they say is that the management of the company remains sanguine about the near and medium term outlook for the business. Impact of the budget announcement, which was, remember, taxing the large size insurance policies, is seen manageable by the management of the company. They expect a 15 to 20% overall APE growth in FY24 pickup, especially in the month of March. Also, they expect a healthy retail protection growth of about 20% in FY24. This valuations for the stock have come down, and so has been the case for the sector itself, but it's still the most expensive stock in the pack, trading at valuations of about 2.3 times FY24 price to embedded value.
Okay, got that. Thank you very much for all of the details there, Yash. Well, let's welcome in Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sudeep, great to have you on the show. Thank you for joining in. That's a pretty interesting view that we've got from the street on HDFC Life. So let me actually start with that. This has been a hotly debated stock, and the kind of price damage that we've seen. I mean, the budget announcements, and even before that, it's been quite a laggard. Do you think a turnaround is in sight?
Well, Survi, I think the entire life insurance pack I like. I believe fundamentally nothing has changed between what we were all talking about, let's say, 1 year back and now. The rationale that we are grossly underpenetrated as a country, and there is significant scope for expansion as far as life insurance business is concerned, definitely remains. Yes, there were challenges during COVID, and the claims on account of the loss of life as far as COVID is concerned, and pretty much the entire life insurance industry did have their own set of claim ratio going up and challenges as far as valuation is concerned. The budget, the change made in the budget as far as, higher value insurance policies are concerned, our belief is that it won't have a long-term impact. It will require some amount of adjustment at most of the life insurance companies, but it won't have any significant long-term or medium-term impact on their performance or the margins. So the logic for buying an insurance company for long-term does remain. As far as HDFC Life is concerned, the Exide Life acquisition and absorption does give it a leg up. And yes, valuations are still kind of elevated if you compare with other things. But I think considering the growth potential, HDFC Life and even SBI Life do look extremely good at current valuation.
Okay, let me just put out some stocks, Sudeep. Good afternoon, and throw the question your way. So basically, the idea is that the market started correcting on the latest Bank Worries episode starting last Wednesday, which was the 8th of March. And we've given up about 4.5% on the index. So what I've done is just looked at Nifty and mid-cap losers, which has taken the biggest knock. And mind you, it doesn't look prima facie that the corrections have got anything to do with, or they're directly, or even actually in some cases indirectly related to what's happening with a broader risk of, that is, bank-related worries. But IndusInd is down about 13%. Mahindra & Mahindra is down 9%. This is just since last Wednesday. RIL is actually, the heavyweight is down 8%. Adani is down 8%. Eicher Motors is down about 7%. And then losers, these are the gainers. I mean, a few of them, BPCL, Tech Mahindra, Titan. But the other mid-cap losers, Astral is down big time. I'm not even sure, actually, is it just pure price performance? Is there some adjustment? But it shows up as a big 30% cut. Patanjali is down 12%. We know the reason, of course, news flow related. And Union Bank and Canara Bank are the others, which are down 12 and 10% respectively. There are more, but I'm just kind of limiting myself here with these 5 or 6 names from the large cap and mid cap space. Sudeep, anything of interest to you here?
Well, I think, if you look at some of the large cap names, pretty much the reason for the sharp correction was FII selling. FIIs hold a large chunk of M&M, RIL, and obviously they were selling these counters when they became risk averse post what was happening in US banking industry. If I have to pick up something taking advantage of the correction, I will probably go for Reliance. Fundamentally, nothing has changed as far as Reliance is concerned. Yes, we were all expecting ARPUs to start going up, but with Reliance launching, a new pack pricing for attracting postpaid customers, there is still price war, and probably ARPUs will not go up in a hurry. But otherwise, the value unlocking argument over a period of maybe 6 to 12 months, whether it's the geo business or the retail or even the green energy business, does remain. So the refining margins, yes, oil prices have come down. Refining margins will probably correct, but still, I think we have nothing to lose hope as far as Reliance is concerned, and the valuation after correction do look attractive for a medium to long-term perspective. I will also not, probably write off IndusInd Bank. The correction to an extent was due to the disappointment on only 2-year extension for the CEO, MD and CEO. Market was expecting 3. There are some question marks why it happened for only 2 years, but the bank has been doing a lot of things right. And the correction gives an opportunity to buy into IndusInd Bank. It's slightly moved up today, but still the logic remains that fundamentally the business is doing well and the growth levers are intact.
I mean, I also found it a little weird. Right? I mean, if you have any doubts about a bank leadership, you don't want 3, but you're okay with 2. I mean, it's not, it doesn't quite fit. But the stock did correct, and Sudeep is highlighting that as one of the ideas. By the way, just a clarification, we put out the Astral changes, and my hunch was right. It's down, Astral is down 8% in the period, not 30 as that graphic said. It's down 8%, so just wanted to clarify. It would still count as one of the top 5 or 6 losers in the mid-cap space, but the correction is not, from 1440, it's basically come down to about 1330. All right, we'll take a break here. Sudeep is with us. There's 12 minutes to go for close. We'll come back with more on the other side. Okay, welcome back. Just 8 minutes to go for close. We are up 100 still. Now, global issues, of course, still remain front and center with expectedly the situation still taking some time to settle down. Some believe we are far away from that settling down. One of them is Danielle DiMartino Booth, CEO and Chief Strategist at Quill Intelligence LLC. We spoke with her earlier in the day, and she says these issues will continue to fester. The US banking crisis will take time to resolve. Listen in.
As long as there is nothing systemic that occurs over the next few days, that the body of evidence suggests that services inflation in the United States, at least, is running hot enough for Chair Powell and the rest of the officials on the Federal Open Market Committee to raise interest rates by another 1/4 percentage point. And this is what we effectively say, making sure that your portfolio is defensively postured until this wide level of uncertainty passes.
Okay, that's Global Opinion. Let's get you a quick reminder, quick programming note. Our weekend special, Editors Roundtable, is coming up today, 4:30 p.m. And let's get you a sneak preview on what are the big themes that we're covering today. Well, it's a historic week for financial markets. Prashant will be rewinding and also giving us a look ahead with the overall market setup. And with heightened concerns around banks globally, is there a risk for the Indian banks? We'll take you through the details.
As Rajesh Gopinathan resigns as MD and CEO of TCS, Mangalam will take us through the big management changes at India Inc. Finally, Nimesh will join in with all the dealing room chatter we've heard this week. So don't forget to tune in to Editors Roundtable at 4:30 p.m. today.
Okay, some big moves taking place now outside of the index. So look at Zomato. Zomato is now up close to about 4.5%. Banks, mid-cap banks are just rallying. Bank of India is up 5%. South Indian Bank, pull that stock up for you. South Indian Bank too, seeing a spike in the last 10-15 minutes. In fact, the Nifty Bank has now extended its gains and is currently up 550 points. It's a 1.5% rally witnessed over there. And Bharti Airtel has moved to the high point of the day. Earlier this week, it was bludgeoned, it was hit hard on fears of Reliance getting aggressive in the postpaid market, which has been the domain of Bharti Airtel. But today, Bharti Airtel is trying to recoup some of those losses that it had earlier in the week. Sudeep, any thoughts on Bharti Airtel? Should investors, stakeholders be worried about Reliance's aggression in postpaid? And can it create a dent to Bharti Airtel?
Well, honestly, it's a little too early to call. Yes, Bharti Airtel has been traditionally strong in postpaid, and Reliance Jio hasn't made much inroads there. And we all know that's the lucrative segment of the market. Reliance definitely will try, and they are trying very hard now. Let's see how things move. I will be neutral on Bharti Airtel at this stage. We'll wait and watch this telecom pricing war getting played out.
Sudeep, it's been an interesting week. The market is still on a bit of a fire sale mode. Leave us with an idea. Anything that has kind of come on your radar, anything on which you have good conviction?
Well, Surbi, I think I'm still convinced on the infra construction bit. I think the government is committed to the capex which they outlined in the budget. Public expenditure has to happen with the elections looming large in the horizon. And the infra construction companies will definitely get loads of orders, an opportunity for bulking up their delivery competencies and margins. So the top of the pack, I think Larsen and Toubro, I think that is one stock which anybody having, let's say, a 9 to 12 month kind of a view should go and buy. There has been correction post results as far as L&T also is concerned, and it's a great time to buy. The company has improved a whole lot of things, including working capital allocation, got out of unrelated investments, sold a lot of unrelated assets and showed up working capital. So I think L&T is the stock which one can go and buy and plan to hold it for a year at least.
All right, Sudeep, thank you very much for your time. Good to speak with you, and have a good weekend. We'll see you back next week. Well, the market closed in 3 minutes, so let's quickly tell you the lay of the land. 0.75% higher on the Nifty. The Bank Nifty did much better with a 1.4% gain. For the week, the Nifty is down 300 points. That's about 1.7%. And you got the Bank Nifty, which for the week is down about 2%. That is 800-point cut on the Bank Nifty. In today's session, the Bank Nifty outperforming what the Nifty really did. Now, sectorally speaking, I think there's not very much which has changed from the time that we started at 2:30. Real estate, metals are the two indices which did well. Banks I already mentioned, and IT. Actually, metals and IT are the two bigger sectors apart from banks. Real estate not so much, which participated quite well. Both private and public sector banks doing well. And on the downside, you had media, but that's largely Z. Media was the top gainer yesterday on the back of Z. It's the biggest loser today with a 1% cut on the back of Z. Pharma down about 0.6, autos are down about 0.5%, and then there is FMCG, which was actually flat. It improved over the course of the last 1 hour.
Okay, talking about individual movers then, on the gaining side, IT led by HCL Tech was higher in trade. TCS slipped in the last 30 minutes, so by the end of trade, it's down close to about 0.4%, so likely to end in the red. Apart from that, in the metals pack, Hindalco, JSW Steel looking up, but banks stole the limelight in the last 30 minutes with phenomenal up moves in the last 10 minutes in names like HDFC Limited, HDFC Bank. Remember, they've got the NCLT approval for their merger. So that gave a lift to the stocks. ICICI Bank higher in trade, Bharti Airtel ending at the high point of the day. On the losing side, auto in a bit of a reverse gear. Eicher Motors top nifty loser, aided by Maruti Suzuki, 1.5% gone on that. And NTPC, some amount of profit booking. It's had a couple of good weeks, but today it's ending in the red.
And beyond the index, lots of stock picking going on. I think people looking for some stability in the market and just going in and nibbling now. That was very, very evident. Whether you're looking at a KPIT Tech, 5-6% up, something like Electra Green Tech, some of the tier 2 PSU banks like a Bank of India, 5% up on that stock. Look at a Kalyan Jewellers, 12%, Jubilant Pharmova, 10% higher, a stock like Mirza International, 7 to 8% up. It's a long list of gainers, really. If you're going beyond the index, Monte Carlo, 12% up. So lots and lots of stock picking going on in the broader market. The bell has gone. The Nifty now, because of today's move, has pared down its weekly losses to just about 1.6, 1.7%. Bank Nifty, of course, was the weaker one, down about 2% for the week. Mid-cap index also down just a shade under 2%. But at least the end is on an optimistic note, guys. I don't know if we can say all's well that ends well. Next week is a heavy one as well. But for the time being, I think the bulls will go into the weekend feeling a little relieved.
Absolutely, right? Not a bad ending to what has been a difficult first half.
Difficult week and a difficult 2 weeks actually now. So let's hope for some peace. Well, all of you have a very good weekend. From all of us here, it's a goodbye. Thank you very much for staying with us. But don't go anywhere. Our Friday special, Smart Money, comes up next.